Why does the dollar become the dominant currency? Have anyone actually thought about it? I assume that many of our audience live in an era where the dollar is actually the dominant currency already, so we kind of adapted to it instead of deep thinking how it happened and why dollar was destined to become the dominant currency for the world. Why? The fact is that in the process of our daily usage on currency, the US dollar become the world's currencies. Not because the dollar wants to become the global currency, but the world chose it to be so. This might sound a little bit confused, but let's get back to the ground before ascending. There are relying on many variable currency in the world. You have the French currency, the French franc, and then the German mark, and then the Russian ruble, the Japanese yen, etc. But why the US dollar become the dominant currency? Could petrodollar the main reason why it is, as explained on my last video? Well, the answer is that the dollar's liquidity is the best among all currencies. It's like for example, you're holding a dollar up and then it goes with "I'm gonna sell my dollar," and then the split second after, someone snatch your dollar and fulfill your trade. And this is what they call sufficient or high liquidity. Ever since the door for globalization opened, if you understand what is globalization, it's like exporting and importing goods between countries are open. That includes the inflowing and outflowing of their local currencies, which of course you can also include like talents, technologies, everything flowing across and between countries too. To further elaborate this, assume that you're an university student with a master's degree. Consider yourself as a goods in which the market is looking to bid on you. And if you're on a country where it's underdeveloped, chances is that there might be job opportunity, but because of the lack of competitions in the market, people weren't amused on increasing the price on hiring you. And now you're on a country where it's well developed, universities, transportations, roads, everything's good. Your job opportunity increases. And because of the condition of the market needs your professions, they're looking to bid higher on you. And because of the competitions, your employment requests get filled fairly quickly. This applies to those who are on the same field. People here looking for jobs, they get filled quickly. And automatically, more and more people have the consensus this is a better place for job fulfillment. This is the place for their first preferences to stay on, to live on. Now, I'll temporarily memorize this concept first. We will get back to this part later. Now, zooming out a little bit, we are saying about currency being like stocks in the market. The bigger the market cap, or in this case, the larger the trading volume, the less so it wobbles, like the stock wobbles. Now, imagine an Apple stock with a market capitalizations of 1 trillion USD, and imagine you have only $10 in your hand. Do you think you can influence the price? Do you think so? It doesn't even ring a bell comparing to the size of those who have billions, right? Now, similarly, the US dollar with an enormous daily trading volume doesn't get pushed around as easily by random event or random guys. Again, assuming you're with your $10 again, do you think that... Okay, I get you. You believe it won, right? Cool, you get the point now. So you know that different currencies have different value, right? Because that each of the country in the world, as turmoil happen, no matter it's good or bad, politically, trades or whatever events, these will affect the status of the country, right? And therefore, the country value move accordingly as what the capital thinks, right? And these capitals, assuming there are those countries they're holding their local currencies, they will need to bear unwanted risks of either the currency devaluate or appreciate, right? And now assume that you're a capital and you might experience a negative 10% or a positive 5% this week. Would you consider currency that's rather stable now? and storing this specified currency that in which you believe would be stable as the base, the main currency of the basket of all currency you are holding. Now let's get back to the globalization that part again. You see different countries export different stuff, right? In order to buy their goods, you need to have their local currencies in order to complete the deal, right? Now imagine the Saudi Arabia, they are selling oil. They could use their own currency, the Saudi Riyal, or the Russian ruble for the Russian oil export, and then maybe the India for the ruble for their trades, and then the China with the yuan for the goods. Now at first, everyone is just using their own money in this cycle for trades, going round and round. It's like I'm using yuan to trade with each other, trade in and back and forth, something like this. But after a few loop, maybe like in just a year or two, most people eventually go back to the currency with the largest pool, the one with the highest liquidity and stability, the USD, to secure the asset, also convenient on using as a base currency to exchange to other goods, as well as accessible to other currency as well. Not to mention, during after World War II, US is the largest manufacturer in the world like today's China. US was the largest importer as well as production and exporter. Holding dollar has more beneficials than holding other currency in the longer term at that time, and that made the US dollar the dominant currency in the world because the world have chosen USD. And additionally, US has the largest gold reserve in the past that legalized your status further. This is the ending of the video. Thanks for watching. See you again soon. Bye.